Hello traders, Gary Wagner here. It is 12:35 in Honolulu, 6:35 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 17th day of May, 2024, and this is the evening report for gold and silver, our weekend review. Gold pricing surged today to close out the week higher, now the second consecutive week of strong gains in gold. The most active June contract gained $31.90, 1.34%, to take an ounce to $2,417.14. Wednesday evening, which is actually Thursday, just prior to the open in New York, we sent out a trade alert to buy gold at $23.7860 with a stop. We will talk about that and our stop when we pull up our technical studies. Silver is also surging well past $30 at $31.26, basis the most active June contract. Today's gain was a gain of 4.63%, $1.38.5. On Wednesday, in the action and forecast section of the members premium page, we did say that silver is looking bullish as gold, and traders can now enter into long silver positions upon us buying gold. All traders in both gold and silver should be long. For the better part of the week, the dollar traded lower and aided in taking gold higher. That changed yesterday with a small uptick. Gold continued to break to higher ground, even though both the dollar and yields were rising. The dollar index was neutral today, down 0.03%, taking the index to 104.505. For our gold traders that either accumulate physical gold, as we do recommend, or trade the spot or physical market, spot gold actually opened at $2,400 per ounce and traded to a new all-time record high, $2,431.50. Based on recent market moves, where do I believe gold is headed to? Well, the first thing that we have to acknowledge is gold is close to striking the all-time record high that came in at $24.4880. That is this. To that end, we have done a basic Fibonacci extension. We're beginning from the low that came in on the 19th day of March at 2150 up to the all-time record high. And then we take it all the way to the conclusion of the correction and begin to plot upside targets. The significant levels is the 61.8% fib retracement at 2468, the 78.6% retracement at 2518, and the 1-to-1 extension of this wave to the current wave comes in at 2582. I think that this target could be achieved, but probably after a shallow correction. The last study that I want to use that confirms some of the pricing that we are looking at is a super cycle Elliott wave count. Each wave is more than a primary wave, taking years to develop. In the case of wave 3, it began in April of 2001 and concluded in the middle of July at approximately $1,919. That was the record high at that moment. From there, we had a multi-year correction, taking gold back to just about $1,000 at the end of 2015, beginning of 2016. And that began this super cycle fifth wave that we are currently in from 2015 to 2024 as we currently stand. And here is what is fascinating about the findings. Typically, when we look at a wave 3 and try to forecast wave 5, the protocol or most standard technique is to take a 0.618% extension of wave 3 to wave 5. When we do that, it calculates $2,085. Interestingly enough, we have a series of tops that came in at this point here, here, and here, stating that that was an important point. But this last move up tells us that we now have an extended fifth wave in our super cycle, and the next valid point is $2,719. Traders, what this long-term chart tells us when we look at an Elliott wave count, standard protocol for measuring or forecasting the fifth wave, because it is broken above the 61.8 and 78.6. If it backs off here, that's one thing. If not, this supercycle fifth wave could easily take gold to a 1-to-1 relationship between wave 3 and wave 5, and that, traders, would put gold above $2,700 per ounce, my highest forecast ever in terms of gold pricing, based on the recent moves that we have seen over the last couple of months. So, based on the studies that we have just done, how will we handle our current trade? Of course, our entry price was June gold at $23.7860. Our current good till canceled stop is at $23.6120, and currently we are well above that at $2,419.80. First, sometime within the next week, we will roll over, hopefully pulling good profits on our current trade from the June position to the August position. When we do that, we will adjust our numbers accordingly. But what we're going to look at on this next week is follow through buying and see how gold reacts as it approaches this all-time record high at 24.48. That has to be our first target, because absolutely the all-time record high will serve to act as resistance. If we see gold break through tremendously, if we see it find some resistance, we will act accordingly. But for over the weekend into Monday, we will maintain our current long position. And lastly, traders, in terms of our current upside target at around $2,580, realize that that long-term super cycle study we just presented kind of knocks this price out of the water. Traders, I have been buying and accumulating gold all of my life. I highly recommend that you use the same company that I use to purchase my physical gold, which is Miles Franklin, the oldest mint in the country, a reseller of products from the U.S. Mint. Call Eliza K. Johnson. He is a representative of Miles Franklin. He will work with you confidentially and quickly to get you the best pricing for physical metals. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you after the weekend for the next daily update and review. Bye-bye.